Viewers, let's move on and let's go across to Kunal Bothra, who is joining us live to help us with today's learning. Hi Kunal, very good morning and thank you so much for your time. Take us through what are the learnings for today.
So now that you're seeing so many reds on the screen, the topic for today...
I'm wearing a shade of pink, so it's a little brighter, isn't it?
It looks like a shade of red. So now that we're seeing so much red on the screen as well as in the markets, the topic is also on the red side. That's bearish engulfing. So it's an interesting set of topic because this generally indicates that how stocks form a top for themselves or get into a zone where there's resistance somehow creeping into stock prices and the stocks get into a reversal. So we look at a very simple prime example of what bearish engulfing is all about. This is how the bearish engulfing charts generally shape up. Where a stock is going through an uptrend, you see the stock forming a lot of green candles. All of a sudden, there is this bearish candle which tries to engulf the entire previous positive candle for the stock. This acts as a zone where the stock suddenly faces a resistance, and this could be termed or indicated as a change of trend for the stock. Now, this may be a change of trend. This could lead into a minor corrective phases. Depends on the nature of the stock price and how the stock is placed in the recent rally for the stock price. We will take a couple of examples over here. The first example is on Tata Consumers. Very recently, we'd seen the stock rallying up from 1100 levels to almost 1250. As you can see that this was a very clean kind of an uptrend for the stock. Many a times the stock was actually going through a phase of pause in between and then a sudden uptrend. But immediately post an uptrend, the stock or this rise got rejected, and you see the stock forming a bearish engulfing pattern. What this pattern did was the stock getting back into a mean reversion phase, coming back to a simple moving average, and that's where the stock found a bottom for itself. So this is a classical sign of how bearish engulfing patterns generally call a top of a trend or at least a start of a corrective or a reversal phase for the stock price. We'll take one more example, and for stocks like IndusInd Bank in this case, there are multiple times when we see a certain pattern get repeated. So over here, as you can see, that the stock formed a bearish engulfing pattern twice over here. So first instance was at this zone where the stock, after a steep rally on the upside, formed a bearish engulfing pattern, and you saw the stock getting into a reversal. Second time, again at a very similar kind of a resistance zone, the stock formed another bearish engulfing pattern. This was after a point when the stock had seen a sharp rise, a bearish engulfing pattern was formed, and this led to the stock getting into a corrective phases. So this is a classical sign of how bearish engulfing pattern shapes up, and that's what you can probably anticipate, a stock forming a top or a reversal over the short to medium term.
All right, then. Thank you so much for that, Kunal, for teaching us something new. This Pathshala, that is bearish engulfing pattern. But